points from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in at January 4th, 2022, and the bull market continues. We saw another record high today. It was overall bullish, but there was definitely a lot of things going on, and if you saw the bonds, this was the first thing. This was the worst start to bonds since 2009, so the yield shot up, TLT went down. This was a big part of what we saw today, but we did get the record highs, and as we start the new year, you already got people talking about what is going to happen, and now that's why I got to show you the first pretty picture here. What this chart is showing you is pretty much what happens the year after the stock market posts a 20% gain. So only happened about 27 or 29 times in history, but on average, the next year, the market goes up about 13%, and one of those years was actually 2020. That's what we just saw. So some estimates are coming in already. People are feeling bullish. We're going to see what happens today. Again, it was still a slow day. Not everything was open, but by tomorrow and everything else, it should get very, very exciting. So we got a lot to talk about. I'm going to go over everything that happened in the market today, what we're looking at tomorrow, the plays that we made, and I actually made a lot, and I'm telling you right now, earnings is right around the corner. We're already factoring this into trades, but even with everything we have for the rest of the week, we should get a pretty active start. So we got a lot of plays, and hopefully the lessons on premium and pricing have been helping, because it's going to start coming up here, and there's going to be a lot of opportunities. So right after bed, getting into the keys, and make sure you guys don't forget, drop your thumbs up on the video, and if you don't know, we are live Monday through Friday, 30 minutes for open, youtube.com/the-stock-market. We will see you there in the morning, and we make all the plays there. But as far as what you saw today, it was a solid day. Again, another record high. We talked about it today as well, too. The volume, it came back. You could see it's higher than anything after Christmas, even the week before Christmas. So people definitely showed up to the office today, but we did have a couple of countries close. We'll see how they react, but essentially coming into the next few days, we should start to see the speed pick up. People should start trading. We should be getting more news, and like I keep saying, we have earnings right around the corner. But besides all of that, like I already said, the big story of what you saw today, it had to do with the bonds, and this was the worst start since 2009, and the reason is people are pricing in the rate hikes and what the Fed is going to do. So we are still going to get the minutes on Wednesday, but even after this bond move today, the 3-month has moved up, or the 2-year has moved up to the point of March 2020. The 10-year again had that pretty awful start, but when you look at all the bonds, even the 3-month, what this is all pricing in, the market is fully pricing in a liftoff of rates by May, and then now people are talking about March pretty much being a live meeting. So it's shortly here. We're going to get the Fed a lot, and this is going to be the main key. If you watch this trend with bonds continue and we start to see it slip, this might be the tell on how things are going to shape up early on into the year. So even though the market's hit a new high, a lot of things are moving. There was a historical precedent today here with the bonds. Again, a multi-decade long move. So where we go from here will be key. But now coming into the rest of the week, like we said, you're going to be getting a lot of economic data. The Fed minutes are on Wednesday, but the one thing I want you to watch for is the speeches that follow afterwards. So you're going to even be getting to hear, I think, from Brainerd or Bullard on Wednesday, and then a couple of other people there on Thursday. But the idea is now this will probably be the only bearish thing that could hit this week. Again, unless there's negative Omicron data from other countries and how they handle it, we probably shouldn't see anything bearish unless there is like a black swan or a market event. But for the most part, the only thing that could really be bearish here is when the Fed starts talking hawkish again. Think back to the last time we heard Powell, then it was shortly the holidays, the volume was low. People got over it pretty quick because you haven't heard anybody talking about it. So it looks like if we are going to get a slowdown of the bullishness, or if things are going to change gears, it's probably going to be somebody from the Fed saying something very hawkish, and that will be the trigger. And really, until then, that's all we're looking for, and then we're going to factor factor in earnings and everything else. But coming into the company news and events, a pretty simple day. There was a lot of different headlines, but the real big one here, it was Apple alongside of Tesla. But Apple, they have hit a $3 trillion market cap. I believe it's 182.86 on the share price. That equates to $3 trillion market cap, and now their market cap is bigger than the entire United Kingdom's economy. So that was big. Again, Apple has been holding up, been one of those safe havens. We're going to watch how it plays. Again, their earnings, I believe, is the 25th or the 26th, so keep your eye out for that one. And then Biden, we watched this one here live today. It was kind of interesting. Kind of sounds a little bit weird when we get to the end of it, but they launched a plan to fight meat packer giants on the inflation and price gouging, and they're including $1 billion of aid to independent meat processors, and then they created a portal to snitch on any unfair practices. But this is the one that sounded funny. This is real. The president of the National Chicken Council, he disagrees with Biden, and he was saying how nothing has really changed over the last 20 years and that he blames the worker shortage and other things, not the price gouging there. But I didn't know a National Chicken Council existed, so that was cool. But there was that, and then Tesla, they added $144 billion of market value after the reports of their deliveries. Again, we talked about it. I was even very bullish on it yesterday. I didn't end up making a play on it, but it was an overall killer. They were up like 12-13%, but $144 billion. And then on top of that, this one kind of slid in there, but Tesla has now opened a new showroom in the Xinjiang region. Again, that's been that disputed place with the Uyghurs, and we've criticized China and what they're doing over there. So it's an interesting one, again, especially since we put a ban on some of the imports there. So we'll see how that one plays out. And then Coinbase CEO, he has bought a LA home for $133 million, making it the most expensive. And there was another director who sold today. So I don't know if this is good news, bad news, or what, but you should get real estate. And then finally, Digital Realty, they have agreed to acquire a majority stake in Africa's largest data center operator, Terraco. Don't know how to say it, but this is a REIT. And again, keep your eye on any of the REITs here. We've been talking about it. If we get any uncertainty here moving into the beginning of the year, definitely going to be watching that. But that was pretty much the main news. The only other big headline, again, was what happened with the bonds today. People are talking about that. You did get manufacturing numbers as well, and they hit a low, but it did come in with expectations. There is a back and forth here with China. Evergrande is also having another debt payment, but for the most part, these were the main headlines. How we open up tomorrow globally with everything, that'll probably give us an idea how the rest of the week is going to play out. And at the end of the day, we got a big signal here on bonds, and that might lead the way. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 or 4 different stocks that I'm looking at coming into tomorrow. We did make a lot of other plays, and honestly, with how it's setting up, I think there's going to be a lot of opportunities even beyond this list, but I am making a specific focus. One, I want to follow momentum. We're seeing that with the EV names. Even if you can't play Tesla, there's other sympathies, and we went after some. You're watching a big move in banks, and we made a play on that one last week, and then, like I've been saying, earnings is right around the corner. So coming into the first play, the first one I'm going to be looking at is Microsoft, and this one, pretty much I'm looking to trade it how I traded Amazon last week, and then if you remember that play, I actually sold out of that this morning. So we made that one on Friday. Remember, it closed down about 10-12%. I was down $500 or so. It ended up shooting up today, and I closed out at 4,500. Again, I'm probably going to double dip. Like I'm saying, you have earnings along the way, so with enough time ahead of time, you could either get a really good play or we might be able to flip it before, and at the very least, I will have a price history to follow. So I took profits on that play, but the strategy behind that one, if you guys remember, it was pretty much underpacing the last couple days, and even Friday, some of the tech stocks did good and all of that, but again, Amazon, they were really selling off, so I went for the low, and then pretty much it bounced up. So now why Microsoft? This was actually one of their bigger drops here in the morning in the last 2 weeks, believe it or not. You can kind of see it on the candles. There's been a lot of movement, but essentially over the last 3 days, they just really did not bounce back up like Apple, Amazon, even Facebook. I think Netflix was the only one that was there. So in a weird way, Microsoft's kind of underperforming. Again, you could compare it to some of the other names there, or at least they're holding up a little bit better. So I decided to go for the play. And then just like the Amazon play, I'm keeping the earnings in mind. So I'm making sure the contract has earnings. I'm willing to play a little bit bigger, but now here's the play with it. If these end up going down before, anything could happen because we are really, really early for earnings. If you think about it, the idea is I'm going to save some more to average down, and then we can make the final hit. Again, you guys have watched me do that strategy a couple times. So in the meantime, it could set up an opportunity, and really with the drop today, the premiums really, really did go down. So I decided to grab the Februaries. If I am going to average down before earnings, I'd probably go for the March. So I'm assuming these ones are going to be a little bit more volatile. I grabbed the 395 contracts for 44 cents a pop. I got 50 of them, so it's about $2,000, and they did move up a little bit. The spread widened there at the end of the day move there, but you guys could see here on the premium, it really does meet the criteria that we're looking for. Again, on the day, even at like 44 cents, you can see, I don't know, is this the whole chart over here? I have to pull it all the way back, but pretty much you can see 44 cents is right where it opened. I mean, a little bit below. They were trading at 49. Even if we go up to the daily, you'll see these contracts were like absolutely obliterated. So it has time. We're coming into earnings. If we're able to get a good one, I thought it'd be good. I got a lot of contracts. We could play the free share strategy and also take some profits. So tech did have a good move today, so we'll see if that continues. I mean, bonds may be the only thing that messes it up, but we will see what happens. But that is the first play. Now coming into the second play, this one is interesting. IMMX, and this is a biotech, and some people may get excited. If you read PRV there, this is just like the Longeveron trade. So it's similar to the PRV move, but this time it is a little bit different. So I did my research. I even did decide to go with this trade. It actually clapped us, and I was kind of expecting it. And again, I wanted to do more research, but I did lose 22%. Stock was up like 100% today off of the news, and we'll go over it. And I want you to understand the difference, but I decided to go a little bit smaller. I grabbed 500 shares, so willing to take the risk. And even if it does fail, we can do a little bit more. And best of all, this company just IPO'd not too long ago at $5, but this story is a little bit weirder here. So I don't know what's going on. One, I looked at the fundamentals. Their debt structure is not that good. They don't really have cash on hand or anything like that. Apparently, there was an interview after hours or even during hours. They said they don't need money. So we'll see how that plays out. But the real biggest difference, when you look at the Longeveron play, it had a low market cap. The PRV was above the market value, and that's the same case here. IMMX, it's a small float, $60 million market cap. A PRV is worth anywhere from $60 million all the way up to $200, $300 million. So the market cap is below. That is similar to Longeveron, but in this case now, Longeveron got FDA approval of the drug tied to the PRV. So they had stage 1 approved, and then they got the designation, and now they'll get the PRV after the next stage. But in this case, it seems as if IMMX has only gotten the designation, but they still need to pass their phase 1 trial. So I saw this as the biggest difference. I could be wrong on it. We're going to see. Again, I'm willing to get exposure because I think there's still a decent margin of how the stock's going to move. It's fairly new. I mean, it'll fluctuate, but there may be a catalyst in the future. It is similar to the PRV, but we need to watch how this plays out. So I want to see how this plays, again, if we get momentum or anything, but this one definitely caught my eye, and a lot of people asked about it, so I thought we'd get some clarity here. But that is the second play. And then coming into the third play, Ford, baby, pretty much it's just going to be the Tesla runner or the sympathy. So especially if this week plays out how it did, and we kind of see some strength in the value winners that held up, some of the value or defensive names sold off, but some other names like Ford did good. Again, we're getting all of the auto sale data, so that's another catalyst. And then if Tesla just keeps going up, I mean, Ford is going to get some of the steam. You even saw a lot of the other EV ones, and thankfully in this case, this play covers earnings, but Ford reports in February, so we may be a little bit too early on this one, but I did decide to make a play. I grabbed 10 of the February 26 calls for $2.50 or 25 cents, so I kept it small here in the morning. Didn't go as big. I went bigger on the first play, but I liked it, wanted some exposure. Again, we flipped out the Fords a couple times, so waiting for my opportunity, but I am going to be watching this week. I really like Ford, and we still got our shares, but that is the third play. And then finally, this was the last play I made, but Walgreens, their earnings is on the 6th. The run-up is kind of already there. there. They did good today. The premiums are kind of expensive. That's why ours didn't really move, and this is pretty much what I'm going to watch for. They're either going to go crazy from here, or this might kind of set the range until the day before, so keep that in mind. Again, their earnings is in 2 days, but I decided to go for the Walgreens March 60 calls for 49 cents, spent about $490, and again, with any of these pre-earnings plays, even down to the Microsoft, remember, the strategy is flip them before earnings, so I am not going to be holding these ones for earnings. We may get some for free, but I'm more liable to really just take all the profits, flip out of it before, let the earnings happen, and then we double dip after the earnings. But those are the main plays. As far as everything else, I sold out of those Bank of Americas. If you guys remember, we got those Januaries. They got crushed. They actually went up 20-30%. They even closed up, I think, 50 or 60 or more today, but I closed out at 51. We walked away with like a $300 profit. Again, this was a big position, and my logic for closing it earlier in the morning, we still got the Februaries. Remember, this was one of those average down moves there, so banks have been killing it. If they keep going up, I think these ones will come to life again. Was an epic move there on the banks, and we've been talking about it with bonds and all that, so you kind of watch that one come to life, but watch out for them. Took those profits, but still going to be holding, and then I sold out the Amazon, and then I also grabbed the Apple. This was kind of before it went up. I think they closed up about like 10% or something like that. Yeah, not too bad, but I only got one of the 200 calls for 274, kept it a little bit smaller, but sold out of the Amazon. I was seeing some things moving. I liked how Apple was holding up. They had the $3 trillion catalyst, so I figured why not get some. Grabbed the March play. They were even down there with everything else, so thought that one was decent. And then I grabbed the IMMX, and those were pretty much the only other plays. As far as everything else, there was still a lot of movers. We went over every single one of these, but I am going to be watching Airbnb. We got our long-term deposits. I mean, it opened up at a pretty good price. I should have picked up some here, but we'll see how it plays out, but I'm going to be watching them. They came back strong today, even a lot of the travel, so you did watch a lot of beginning of the year positioning there. Not everybody got it. Again, we said watch out for Roblox, but that didn't really happen there, so that was kind of the downside, but watch out for them. Watch out for XLV, and this was part of today. You could see XLV looks slumped, but there was a lot of other healthcare names that were down in the morning and then bounced, like UNH and even Abivai a little bit, but some of that defensive run up, and then even after the ex-dividend, but healthcare, real estate, consumer staples, the one that kind of led us here during the low volume volatility, they kind of gave up today. But watch those names, because again, we talked about that everything rally where kind of everything moves up, so keep a lookout for that, but watch them. And then Walmart, they came up today. The premium still held very, very good, and usually Walmart premiums like to die, so I'm really impressed that it held up here. I'd keep your eye. They really didn't do much in the midst of everything today, so kind of a good sign, so watch out for that. And NVIDIA, a lot of the other chip makers went up. They still closed up good. They were doing a lot better, but watch out for them. Qualcomm, Micron, and even TSM, that was the real leader today, but watch out for that. Then Spotify and Sam, these are some of the share plays that we're holding, but I noticed you got some new positioning here at the beginning of the year. Some of these have kind of been underperformers, so to see them go up, just watch if we see that trend play out, but those are important. And then finally, TLT and the dollar. I mean, we talked about this today. The dollar surprisingly went up. I thought it would go down here. Watch for a pump fake. That's not going to be as important. Like I've been telling you, TLT is it. And remember, we looked at this one point. We said that was the snitch. Those TBT plays, those went up 50%. It looks like it was the move. We may start with higher yields, but I talked about this today. You got to watch out for velocity. Essentially, it's going to rip down through here very quickly, or we might get a little bit more of a sell-off. Then it might bounce for a little bit, kind of like this, and then come test it again later in the month once we get more headlines or anything like that. So velocity is still a question, but I do think that TLT is going to go down, at least for a little bit. It may even happen very, very quickly and revert, but I showed this here on stream. I mean, you could see throughout the year, anytime the bonds really get up to this level, there's kind of one time where it failed and then it kind of switched gears there, but pretty much it usually has to break through to like 165 and then maybe even 1.7. But then when you start pulling out the importance of this like 1.62 level, you could see here over the years, this is where they started to drop from 2022 or 2020, and then even in 2019, this was another low, and this was the range. So it's acted as a really key level of support, and that's where you've seen rates rocket from there. So this is a very key level for bonds, and again, with a move like what you saw today, this is really important. So that's pretty much what I'm going to be watching for. The best part about today is you didn't get a negative reaction cost from it, so that's what we're going to watch for, because maybe the correlation acts normal and gives us some breathing room, but the minute we start seeing equities respond sensitively to bonds, that may be the time to move. So either way, it's going to be exciting. The new year is here. We're already getting new moves. Tomorrow, the gas is going to come in. So I hope you're ready and locked in. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember there's other tree, baby. But the code loves you. I love you. I'm going to see you in the morning. Let's go.